Okay, recording this video on Sunday, the 5th of November, 2023, just gone 5:40 AM Chicago time. Do hope you are doing well. So it's the weekend and time for another weekend futures market recap, where I normally go through 15 of the largest futures markets and I show you what I'm seeing on my charts. This weekend, not going to go through the 15 tick bar charts with the signals, going to keep it pretty high level because this week's activity was super important. And I want to talk about the higher time frame charts on Forex, crude, treasuries, and the E-minis. First thing to say, apologies for the voice. I was caught out in a storm yesterday in Biarritz. Storm rolled through, soaked me to the bone, and picked up a little bit of a throat bug, so that's why I'm sounding a little bit off. But what a week! Up 260 points off the lows on Friday, coming into Monday this week. Just did not stop, rocketed up and up and up. I do hope you caught some of it. I think it signaled pretty hard in last weekend's video that something was up, that we had a lot of buying coming into the close last Friday. And that was going to lead to something. We had very shallow selling, and then in the last, couple of hours of trade on Friday, the professionals were really keen to pick it up. I'll show you that on the 15-minute chart and the tick bar chart, and that's what led to the strength in this week's activity. I think the other part of the story for this week was the resumption of buybacks on a whole bunch of big names, and the market technically oversold. A lot of program buying coming in behind that buyback activity, and that's what has led to this huge rise. So with that being said, let's start with E-mini on the daily chart, and you can see here with this week's activity, we have now finally got our confirmation down here on our exhaustion sell pattern. The market running from exhaustion buy to exhaustion sell to exhaustion buy again. So you can see that the high was marked here with exhaustion buy, bearish divergence. We had rainbow patterns at those highs, and all of that activity at those highs needs to be mirrored on the downside. And that's what we had here. I think the reading down here at these lows, 6.5 million negative selling there, and that plays nicely into this momentum pattern, which is actually only about, there we go, 6.3. Yep, so the levels are similar, and that's why we get the exhaustion patterns. The exhaustion pattern looks a little bit different on each of the indices and the futures, so I'm just going to show you those quickly. We've got the E-mini here, we've got the Dow, we've got the Russell, and we've got the NASDAQ. Here on this previous chart I just showed you is at es.d, so this is day session only data that gives us a pattern that looks like this with the exhaustion sell. When we use the continuous data day and night at ES, here you can see it gave us exhaustion sell and bullish divergence. Similar pattern here on the Dow, exhaustion sell, bullish divergence come in. On the Russell, same thing, exhaustion sell, bullish divergence. Not so on the NASDAQ. So down here we didn't have exhaustion patterns, but we had far more blue professional bars coming in on the NASDAQ chart than we had on any of the other charts. The Dow was nice as well with the lows marked with blue professional bars here, but we didn't get those same patterns on the Russell. So I think it's always helpful to look across the different indices. I look at the indices, the futures, and also the ETFs for each of those markets, just so you can get a more composite picture of what is going on. I don't think one index alone necessarily shows you exactly what's happening. That is what has sparked this big rally, but it marks an important turning point on a whole bunch of markets that we'll talk about shortly. So going down the time frames, the 135-minute chart, there are exactly 3 135-minute bars in a day session of the E-mini. Come down here, you can see how weak the selling was into those lows on Friday there, with that very small reading on better momentum and a little bullish divergence pattern there. We had a cyclical support on the intermediate time frame come in, and as soon as we're breaking above resistances, we start to turn into an uptrend here, with the bars turning into red on better sine wave. We've still got to break above the 44.23 level here to get a confirmed uptrend in terms of both price and volume on the 135-minute chart, but it's certainly flipped on all the other charts going down the time frames. 45-minute chart here, there we go, cyclical support on the highest time frame, and very little selling down here at those lows, and we rocket away now into a confirmed uptrend on the 45-minute chart. So on the 15-minute chart, you can see how weak the selling was. Again, all these bullish divergence little patterns down here, very low readings for better momentum, and as soon as we crack above the trailing stop on better pro-am and bust above resistances on the better sine wave indicator, we get a confirmed uptrend at that point. I was long the close on Friday into this move, so was fortunate to get the gap. But my thought last weekend was that we would have a short covering rally, that then we would have another dip down when the resistances came in on the highest time frame. And so I took profits up here, 42.50s. On that move, and then I actually rolled into long euro on Thursday, and I'm short crude on Friday. So I actually didn't catch this latter part of the move. That took me a little bit by surprise. One of the things I just want to talk about is the Rambo patterns that we've seen over the last few days. Rambo patterns mean that the highs are being made by amateurs and the average trade size is low. So the Rambo stands for a potential reversal of an amateur breakout. I always talk about a potential reversal. They're very good turning points when they signal, and the trick that I've found over the years is to look at the low of the amateur bars in that sequence. If the low of that sequence gets broken, then that signal turns into a good one for showing a reversal point. But otherwise, it's just showing that that move is being led by the amateurs, and it doesn't mean that we're necessarily going to reverse. So this first sequence that we had, I don't know what that was on Tuesday, of Rambo patterns, the low of those amateur bars didn't get broken. And then when we went into Thursday's trade, same thing. We ended up the day with Rambo patterns here, but the lows of that amateur sequence there, again, you can see didn't get broken. Now, it's not until Friday that we have Rambo patterns again at the highs, and the lows of those amateur bars are starting to get broken there. So I could well see us have a little bit of a weakness on Monday, Tuesday, because we've had exhaustion buy and bearish divergence. We've had the Rambo patterns broken. The bearish divergence signal is right on the zero line, so I say in those circumstances, wait for a flush pattern. So I wouldn't be surprised if we saw a little bit of weakness on Monday's trade because of those Rambo patterns, the exhaustion buy and bearish divergence that we've seen there. But this has to play out on a whole bunch of time frames before this uptrend is over. So on the 15-minute chart here, you can see we've broken above a resistance on the intermediate time frame. We're still above resistance on this chart on the lowest time frame. So we've not even put in a pullback to end of trend on the lowest time frame. So this has to run pullback to end of trend on the intermediate time frame, and let's see if it even has to run pullback to end of trend on the highest time frame. So I think it's going to be a little bit messy going forwards, but this uptrend is certainly not over. And then let's go down to the 13,500 tip bar chart. I'll show you what's going on here. So this is the activity that I was talking about on last weekend's video with the close on Friday that was showing all of this buying. The solid yellow lines show the beginning and the ends of the weeks. And you can see here that the selling that we had into the close on Friday was extremely weak. We had two little bullish divergence patterns, three in a row, this one right on the zero line. And then going into that close, we had a huge amount of buying. And before the close, we had an exhaustion buy signal going on here with some blue professional bars. And then we gapped up on the Sunday and then just keep going. And that was the signal that was something going to happen with this week's trade. You can see it's just been a red background the whole time during this week's trade, showing that we're in an uptrend, confirmed uptrend in terms of both volume and price. Then on this time frame, yes, we have exhaustion buy, bearish divergence signals come in here, so we're running out of puff. But all we've done is put in a sequence of pullback to end of trends on the lowest time frame here. We've not put in pullback to end of trends on the intermediate time frame. We've broken above the intermediate time frame here. We've got to put in a pullback to end of trend on that time frame and probably the highest time frame as well. So we're still technically in an uptrend until all of those things come in. So dip buying, I think, is the order of the day. So there we go. That's the E-mini highest time frames down to the lowest time frames. Normally what I do now is I go to the 15 tip bar charts and look at the triple signals. But I think this is such an important week. It's more important to talk about some of the longer time frame charts because we're seeing a total change in trend in terms of Forex, potentially in bonds and crude. So let's talk about those first. The first chart I've got up here is the Aussie dollar chart. So it's interesting for me that the Aussie dollar has the strongest signals at the moment of all the Forex charts. I normally look at the Euro, British pound, Aussie dollar and Japanese yen. The Aussie dollar and the British pound have the nicest signals showing that a bottom's been made in those. The strength that we're likely to have in those currencies will mean that for the time being the US dollar has topped out and we're going to have weakness in the US dollar, which potentially could mean that some of the commodity markets are going to strengthen and potentially gold, silver, Bitcoin and so on. Not sure about the commodity markets being strong going forward because now we've got pretty strong signals from the economic fundamentals that the economy is weakening. So we're going to have two counter trends happening here with the US dollar going down, which normally strengthens commodities, but in terms of demand for those commodities because the economy is weak, that will put downward pressure on prices. So we've got two things going on. How that plays out, I'm not sure, but I'll show you what I'm seeing on my crude chart in a second. Here's the Aussie dollar. This is a 460-minute chart. So there are three 460-minute bars in a day session of the Aussie dollar. You can see here in terms of better sine wave, we've bottomed quite nicely with some pullback to end of trend patterns. Also talk about pullback to end of trends rippling through the time frames. Let's just disable the better sine wave here. You can see here as we sell off, we get pullback to end of trend on the lowest time frame. Then we get pullback to end of trend on the intermediate time frame, the slightly thicker lines here. That's all happening around a cyclical support in terms of the highest time frame. So that's all good, and then we start to break into uptrends. We get a false break here with the bars turning red. We come down and test, and now we've got a break in terms of two time frames. We've broken the lowest time frame, we've broken the intermediate time frame here, the resistance lines there, and we've turned red, showing us that better sine wave has signaled an uptrend. At the same time that that is happening, we've also got better momentum showing us that we've maxed out in terms of selling and we're putting in bullish divergence and flush patterns. So here's the exhaustion sell pattern going on here, the reading pretty extreme. Then we get a bullish divergence right on the zero line. I talk about this frequently. If you've got a bullish divergence right on the zero line, wait for the flush. And then a few weeks later, we get the flush signal coming in here, bang. That was actually on Thursday's trade, and the Aussie dollar starts to rip here, breaking above 65. And then the blue professional bars. So we've trailed down our stop here. We've not busted above this yet, but you can see initially we had blue professional bars coming in on the highs. On the highs, they sell it down really hard at this point, and they're picking it up. And now we've got blue professional bars almost making a U-turn pattern here. They've sold it down to pick it up during this congestion period here, and now they're buying the breakout to get the move going to the upside. So that's the Aussie dollar, which is looking strongest of the lot. The British pound is similarly looking pretty good. I'll show you the euro chart as well, because euro is also strengthening at the moment, but it doesn't have quite as pretty a picture in terms of this low being made. So let's turn off better sine wave here. You can see same type of pattern. We've got support coming in on the highest time frame that we're just fussing around with here. We put in a pullback to end of trend on the lowest time frame. We started to put in a pullback to end of trend on the intermediate time frame, but then the activity raced away with us on Friday and we busted above these highs. And so we're above resistance on the low and the intermediate time frame here, with the backgrounds actually turned into red as well, showing that in terms of price and volume, we're in an uptrend. And then here, better momentum at these lows didn't give us an exhaustion sell pattern like we had on the Aussie dollar, which was nice. But we do have blue professional bars coming in here. None since then, but now we're breaking above here and trailing stops flipped to the reverse. So I actually think that of all of these, the Aussie dollar is the strongest, the most tradable at the moment. The euro still going up, but I wouldn't be surprised if we had another move down to an exhaustion sell pattern, readings like this, but have to wait and see. And as I said, because all of these are strengthening, the Aussie dollar, euro, British pound and so on, the USD is going to be weakening for the time being. Now, 10-year notes, this is really important. Here's a nice picture, but we're not done on the downside in terms of 10-year notes. With this week's activity, we had a bottoming pattern come in and it looked really nice in terms of better momentum here. So we've got our exhaustion sell, bullish divergence, more exhaustion sells, more bullish divergence coming in here. So in terms of volume momentum on the downside, we're really bottoming nicely. And then here we've got blue professional bars coming in on the lows, forcing it up and then forcing it down into those lows. Nice patterns coming in here and here. And then with Thursday's and Friday's activity, bang, we have a U-turn. So forcing it down at this point to accumulate during this zone here, and then getting the move going as we break out of this congestion pattern, bang. Better Pro-Am hasn't flipped yet, but that will happen in the next couple of days, I'm sure. So 10 years in terms of volume looking nice. In terms of better sine wave and the cyclical trending patterns, here we put in a whole bunch of blue professional bars. We tried to stop this move down here with pullback to end of trend on the lowest and the intermediate time frame all coming together at that point, having overshot. But we didn't have confirmation from better momentum, and we didn't have blue professional bars at those lows. So that level didn't hold. So that forces us down to the next level, and that's where the professionals step in. So it's looking good. Pullback to end of trend on the lowest time frame, but we have still got to put in some more testing patterns. We've got to put in pullback to end of trend or some resistance to support on the intermediate time frame and maybe on the highest time frame as well. So you can see the difference between the chart here with better sine wave. This has not played itself out fully on the 10-year notes compared to the Aussie dollar chart here, where we have played itself out fully in terms of pullback to end of trends and a support area coming in there at the lows. So that's the story on 10-year notes. I think we're going to rally, but don't be surprised if we sell off some more and just test into those lows to get confirmation that everybody's out of the market and we can rally cleanly. Crude, here we're looking at the 460-minute chart. Again, exactly 3 bars in a day session of the crude market. I'm actually short crude at the moment, and the reason for that is that we topped out here for the time being up in these 93 type levels. Pullback to end of trend on the lowest time frame. We had a pullback to end of trend on the intermediate time frame. We start to break into confirmed downtrends with a background in grey, and we had a weak little rally up with amateur bars testing up into that 90 level. They gave way and we've sold off here. Now this 80 level, absolutely key, kind of held on Friday. Blue professional bars held it at that point in order to use all of this congestion zone to get short into that move. So a break back down below the lows of those blue professional bars, which is at 80 pretty much. That'll break us into a trend move on the downside on this higher time frame chart. So that's why I'm short crude at the moment, and let's see with this week's activity whether the 80 level holds. So there we go. Again, apologies for the croaky voice. Hope your trading is going well, and looking forward to next week's trade.